Mortgage interest rates are in the low 3% right now, and most would think that this is the perfect time to buy a house. Why wouldn't you want to lock in that interest rate? Now, a record low interest rate will save you thousands upon thousands of dollars in the long term.
I'm talking about this.
Except one thing. There's a mortgage crisis. Hey there guys, Josh with Debt to Dollars here, where we cover everything from credit to investing, which will lead you to a life of financial freedom. Now before we begin, I want to let you guys know that I do upload videos on a weekly basis, so make sure to hit the subscribe button down below. Okay, now that we've gotten that out of the way, I want to go into a specific topic that everyone is talking about and everyone's affected by it right now. And that's what people are calling the quote-unquote mortgage crisis 2020.
Oh crap.
Just in the past month, mortgage availability credit has declined to 152.1, and that's a 16.1% plummet in the month of March. Now that's a record low since June of 2015. Now that sounds real scary and technical, but is a crisis really on the rise for mortgages? And what does it mean for us? It means that the entire mortgage industry is tightening up their guidelines as well as imposing stricter rules on who and who cannot get a loan. Now reports show as of today that it is 24.2% harder to get a conventional home loan. This has made it much more difficult for anyone to get a home loan right now, and many fear the worst is actually yet to come, just like the New York Times, of course. This quote-unquote mortgage crisis 2020 has actually become pretty bad, and I personally believe that it's only going to get worse. And here's why. So the first question that I want to address is, why is this happening? As I mentioned previously, the availability of mortgage credit has declined drastically in the month of March, and it's expected to be even worse in the month of April. This mortgage credit is what lenders pull from in order to give you your mortgage for your home or your investment property. To say this in simple terms, the access to that credit is now much more tighter and much more restricted. And in between all of it are the lenders, the banks, and us. If there's less credit that banks can pull from and individuals are getting laid off as they are in their massive economic shutdowns, it only makes sense that the banks aren't going to give out as many loans as they once were in the previous quarter and last year. Since lenders aren't giving out as many home loans as they once were and people aren't paying their mortgage as well as the economy is who knows where, it's taking a vacation, this creates the perfect storm. And the simple answer behind all this is a result of the COVID-19 coronavirus situation. Okay. I understand that there's a potential crisis going on right now, just like everything else in the world currently, but why is it harder to get a home loan at this point? Just in the past week, one of the country's largest banks, JP Chase, issued their new, tighter, and stricter guidelines around who and who cannot get a conventional loan. Previously, for a conventional loan, you only needed a 620 credit score as well as a minimum of 3% down on that home. Now JP Morgan and some other banks are saying, hey, you guys need a 700 credit score, and in addition, you need to put at least 20% down on that property. This makes it extremely difficult for some individuals who do not have that solid credit history that some do, as well as coming up with 20% down for a home. Oh, and by the way, guys, if you guys are interested in how you can increase your credit score, especially during these rough times, I've already made a video on how you can do that in a fast way in 2020, and I'll put it in the cards above so you can watch it after this video. Okay, so it's not just JP Chase who are imposing these stricter guidelines on who can get a conventional loan. Wells Fargo just recently announced that they would also be imposing stricter guidelines on who can get a loan, and some other smaller banks are following their coattails. Most banks have stopped accepting applications for home equity line of credit, HELOC applications, as well as refinancing applications. There's so much uncertainty in our given situation right now that lenders are even questioning themselves. If they give you $1, are they going to get that dollar back? So that is why the banks are taking these extra precautionary steps to make sure that they're only lending to dependable buyers with above a 700 credit score and additionally 20% down as a minimum down payment. What a time to be alive. You also have to think about the coronavirus effects going on right now. So since the economy shut down as well as unemployment is rising at record rates, it's very difficult to verify someone's employment history. The lender can't just call up your company and say, hey, is John currently working there? Because guess what? Nothing's open. And adding to the difficulty, lenders are even asking for longer proof of employment history. These banks are requiring all income and asset documentation to be dated within 60 days of the initial application. Now, looking in the past, it's typically 120 days. Double that. And the last thing I want to mention here is around the applications. Applications are being processed at extremely low rates right now. And that's because since the economy shut down, there's less employees that can handle and process those applications, as well as these lenders are asking for more documentation to process. All right, how long is this going to last? It's honestly tough to say, but the one thing that is certain is that the 2020 housing market is going to decline and it is going to slow down. However, this is not like the 2008 Great Recession. The 2008 mortgage crisis was a direct result of our housing problem here in the United States. Lenders were taking loans and giving them to anybody who could honestly breathe. And this situation is different here in the mortgage crisis 2020, and that's because this isn't a direct result of our housing problem. It's a direct result of the coronavirus COVID-19 situation. My expectation is that once the economy started back up, hopefully in the coming months from now, that the housing market is going to be following that trend of curve. Once we get back to normal, and especially once the unemployment curve either plateaus or begins to steadily decrease in its rate, I believe that lenders are actually going to remove these tighter guidelines and begin to ease up on these restrictions. If I were a betting man, I would say that this would happen by the fourth quarter of this year, so hold tight. Now, what if I have over a 700 credit score and I'm willing to put 20% or more down on a house? What does this mean for investors? My thought on this is that if banks are imposing these stricter guidelines, there's going to be less buyers. So in simple economics, if there's less buyers, there's less competition, and there's less demand. This means that we're going to transition into a buyer's market, and it's expected that homes' values are going to decrease, at least for this period of time. This is a great time to purchase an investment property, especially one that's off the MLS. Now, if you have over a 700 credit score and you're willing to put more than 20% down on a house, this entire video should be great news for you.
The bottom line.
Bottom line, guys, there is a mortgage crisis that is ongoing as a result of the COVID-19 situation. However, it's nothing like the 2008 Great Recession. Just like everything going on in the world right now, guys, I expect a decline to happen in the housing market, at least for this time being. If you're looking to buy a home this year or an investment property and you meet the criteria that we covered in this video, then I would say go ahead. You're going to get an awesome deal on your interest rate, and there's no reason why you should be waiting until after this is all done. With that being said, if you're cash constrained or you have a iffy credit history, I would say wait until the later half of this year or 2021 to make that purchase. As always, thank you guys for watching. If you learned something new today, make sure to go down below and hit the like button. This really helps support the channel as well as the YouTube algorithm, which puts my video on top of others. So I'd really appreciate that, as well as subscribe for next week's video. And I will catch you all next time.